Hello and welcome back to WealthyTrades.com. This is Tyson Clayton, and I am in the middle of a series called The 4 Steps of a Successful Trade. In the last two videos, I explained step number 1, which is getting a directional bias, and step number 2, which is putting odds in your favor. Let's recap real quick. Step number 1 and how I get a directional bias is based on the Wealthy Trades dashboard and the market trend quality. All I need to do is log on, go to the dashboard, and if I'm looking to set up a trade for the next day, week, or month, in this case a day trade, I look at the market trend quality and I base it on the arrow. If the arrow is moving up, I know that more than likely, or there's a high degree of probability that I need to be a buyer or have a bullish bias. But I need to make sure that I gauge that bias on the trend quality. So therefore, the market's moving up, trend quality is above 50%. It's at 55.1%. Therefore, I can be confident to take a bullish bias position for the next day. If the trend quality is below 50% at Wealthy Trades, we recommend a neutral bias. There are 3 different biases you can have. You can be a buyer, have a bullish bias, you can be a seller, have a bearish bias, or you can be neutral. So buyer, seller, or neutral. In this case, moving up, trend quality is above 50%. Therefore, step number 1, we need to be a buyer. Step number 2 is putting the odds in our favor. And the way we do that at Wealthy Trades is we take the 9 sectors and we rank them based on our proprietary quality filter. We want to understand and see what 9 sectors, which one of these sectors are the highest performing sectors and gives us the highest chance of success for the upcoming day, week, or month. In this case, we can see that the XLB, the materials sector, in this uptrend gives us the highest probability of success simply based on the quality gauge. That quality gauge, again, based on a proprietary filter of how many stocks within that sector are moving in the direction of the trend, how many stocks continuously hit their levels to win, and a forward-looking proprietary filter of what is the probability of it hitting levels in the upcoming period. It's a very powerful tool, but it's all done for you. It automatically ranks them, and it tells us, putting the odds in our favor, trading within the materials sector is by far the best thing you can do to put the odds in your favor. That is step number 2, but we take it even further than that, and we want to drill down and find the best stocks. If the material sector is the best sector to be in, what are the best stocks within that sector? And that's exactly what we do at Wealthy Trades, and we give you the 8 best stocks within that sector to trade in. So in this example, the best 8 stocks are these 8 stocks, but we're going to focus on one of those to accomplish step number 3. And I'm going to focus on DD because DD, it automatically ranks us. DD gives us the highest probability of success for the upcoming period. What we know right now is we know the market's moving up in a very high quality or quality uptrend. We know that the materials sector is the best sector to be in that uptrend, and now we know DD gives us the highest probability of success trading in that uptrend. That is extremely powerful information. So as you can see, I clicked on DD, and I can use this information in this table. The levels to win levels, the HPP, the historical performance percentage, the levels on levels, the levels to win profit. I can use all this information to accomplish step number 3. And step number 3 is pinpointing my entries. It's very simple, but I use this information to help me pinpoint my entries and then also accomplish step number 4, which we'll talk about in the upcoming video. But step number 3 is pinpointing my entries. How can I use this information of DD being in an uptrend, in the best sector, in a quality uptrend market? How can I pinpoint my entries? Well, very simply. I can see that DD has a current historical hit rate. It should hit this levels to win level at 76.86 level. It should hit that 73.1% of the time. Historically, that's how often it hits that level historically. It's extremely powerful information. This DD closed at $76.31, and it has a 73.1% probability the next day of hitting 76.86. If you think about what that means, then structuring a bullish position right at the open is the way to go, because you have a 73.1% probability of it rallying almost 50 cents for that day. You only have a 25% probability of it even touching the lower level. So therefore, trading on the upside and buying right at the open, buying DD right at the open, is the way to go because it has a high probability of hitting its upside level. That is huge. That's one way you can pinpoint your entry. Just simply using the HPP percentage and the levels to win levels to buy at the open and target those levels. But we take it further than that. If it has a 73.1% chance of hitting this level, what happens when it hits that level? Well, as I can see, with the levels to win profit, the LTW profit, when it hits that level historically, it has a tendency to continue to go. If the number's positive, and this is positive, $1.94, it tells me that over the last 52 times, over the last 52 periods, it's rallied up, hit that level in the upcoming day. It's continued to rally and make money, so I should probably not be real quick at taking the trade off at that level. In fact, that is also because it's made money there, $1.94, trading at that level. I should also be willing to buy if I'm not in the trade and it rallies up to 76.86. That is also a good place to buy within the next trading day. That is a profitable level historically to trade at. To take it even further than that, let's say that the market opens up and DD starts to fall and you're not in the position and it hits 75.76. It doesn't hit that often. It only hits it 25% of the time, but let's say it does hit it in the upcoming day. You can be confident to buy there also because it has a very low probability of closing below that level, only 9.6% chance of closing below that. And historically, when it hits that level, it makes money. It made $1.56 over the last 52 periods, over the last 52 times it's hit that. It typically bounces off that level when it's in an uptrend. It bounces off that level and closes higher. So therefore, we've got 3 potential entries. Step number 3 is pinpointing your entry. We've got 3 potential entries. We can buy at the open and just let this thing run for the day because it has a high percentage probability of hitting the levels to win level. When it hits that level, it makes money, so it doesn't make sense to take the profit there. Let's let it run. I can also buy if let's say I'm not in the trade and I wait until it hits this level, well, I can do what I call a breakout trade and buy at that level because when it hits that level, it typically continues to go. Or if it sells off and it hits this level, $75.76, I can buy there too with confidence because it typically hits that level and bounces higher based on the trend and based on the historical profitability. That is exactly how you use the levels to win information, the levels to win levels, the HPP, the levels on levels, and the levels to win profits to help you accomplish step number 3, which is pinpointing your entries. In step number 4, I'm going to show you how you can use this information to better manage your risk.